We've been on quite a journey as a company. We took this asset in 2018. It was originally a subsidiary of Klondex. I had not seen a lot of exploration on this project for quite some time. It had gone through a rough end in the last gold cycle where it was basically bulk tonnage mined, which did not work well on this project. This is a mine that needs to be handled very carefully. It needs to be mined narrow wherever possible. You need to be very disciplined. You need a certain type of management in place to operate this. But if you do it right, you will do it very well. And that's what we've managed to put together. What we've also managed to put together, which we'll talk about, is a number of new areas close to the mine that give it a whole new life and change the economics of the project. So we'll get into a little bit, and then I'll soak up all my time. Cautionary statements. So the key highlights here is this is a fully permitted, fully constructed operation for past producing operating mines in close proximity to the mill. The mill itself needs a new crushing circuit, which is underway. We've got the engineering already in place. Construction will start in the next couple of months. The orders are in place. Everything's happening. Everything else fully built. We just put a new camp building in while I was there earlier last week. Another camp infrastructure coming soon, but there are already 4 camps there. We've got 150 people that can stay there at any point in time. So we've got everything we need. We've got low-cost hydroelectric power coming to this site. Manitoba is known as one of the cheapest electricity providers in Canada. This is primarily a shaft operation, so a lot of the equipment and a lot of the ore movement is electric powered. The mill is 100% electric power, so very low cost, very stable. Makes us very insensitive to price fluctuations and the things like diesel and fuel out there. So great spot. This is a good, you're going to see the PEA shortly. This is very sensitive to gold price. As gold price goes up, you see a significant amount of leverage to that in this operation because of the low capital required to get this restarted. On top of all that, when you buy 1911 gold, you're buying a very large land package. The other thing that has not happened in the past is a very regional scale exploration program across the project. There's over 62,000 hectares of highly prospective areas across the project. The mill sits right in the middle of it. So everything is within 40 minutes driving distance across a main road. So everything's well maintained. You've got power and electricity throughout the project area. This is where we sit. We're right on the western side of the Ontario border, about 3 hours north of Winnipeg. It's close by. Anybody wants to come, it's a 2.5-hour flight and 2.5-hour drive. Easy to get to. It sits just close to a couple of large townships. You've got Pine Falls, which is roughly 40,000 people. We're right in the town of Bassett, which has 300 people, which, as you can guess, most of them worked at the mine at one point in their life, still have considerable skills. We're close to a couple of First Nations communities, also mining communities, eagerly anticipating the restart of the operations. As Brad mentioned, we've got strong relationships with our communities as well. They are going to be the backbone of this operation as we get it restarted. And we look forward to providing a significant amount of employment and opportunities to all of them. This is our land map again, so you can see just to the west or the east of us is the Red Lake camp. We lie in the same Birchuchi greenstone belt. We have a very large land position which stretches right across that major fault structure, which also feeds that Red Lake camp. Unlike over there, we own the entire area to ourselves, 100%. There's no royalties on this project, nice and clean. Up until a week ago, I would have said no debt, but we did just enter into a credit facility. So I won't be able to say that anymore, but what I can say is it's a nice, clean facility. There's no caps on our gold exposure or anything like that in there. So we've tried to keep it very simple and not burden the project at this stage. This is the team. It does really come down to the team. When you ask people if they would take a great project or a great team, most people say I'll take a great team because they can take a challenging project and turn it into a great project. So what you've got here is a team full of people that have operated mines and they've built mines, either on the board or in the management team themselves. Even myself, I've spent over 10 years in an operating mine environment, so I know what it's like. I know what kind of controls need to be in place to make things run efficiently. But the most important addition to our team really is Eric Vignette, who joined us last December full-time. He'd been working with us for over a year. Eric's got a significant amount of experience in similar types of deposits across the world. Many people know him. His last real career was with New Gold. That was part of the reason he came, because prior to him, we hired McKelly. McKelly had spent over 20 years with New Gold working in operating mines, drilling out resources. They have a great relationship, which really helps things kind of hit the ground running. Eric's been fantastic with the people out at site. He knows what he's doing. We've got a lot of creative ideas on how to optimize the underground. And we do have a PEA, which we're going to talk about, but we think we can do a lot better than the PEA shows. And I'm going to tell you a little bit about how. This is our share chart. I'm not going to spend a lot of time on here. We do have Eric's prod in there. Eric's all about size potential. So all I had to show him was that there's potential for a lot more than the 1 million ounces that's in the resource. This is a deposit that has significant ability to grow both at depth, but also laterally in some of the new targets we've developed. So there's a significant amount of scale, and that's what attracts an investor like him. We do have another stable base of institutional investors, as well as a couple of corporates in our deck as well. Now looking at the project, because this really is all about the project, you see the infrastructure here on site. You've got the town of Bassett just off to the side there and the tailings in the background. This is going to zoom in a little bit on the infrastructure. This is all intact, all in place, all operational. The crushing circuit's just going to sit right next to that head frame when we're done. It's going to feed right into the mill. The ore is going to come out of that head frame, go onto a conveyor straight into the crushing circuit. And there's going to be an area where we can dump ore from satellite mines into the side, and that's going to be mixed in on the crushing circuit. So it's going to be optimized for the purpose that we need it, which is to take feed from the underground and take feed from satellite resources as well, and run that straight into the mill without a significant area of exposure and downtime, which is historically always a problem. This one's going to zoom from a different angle, so I'm just going to skip. That's our camp. There's a new one in there. Now we're looking at the PEA. So 3 days ago, or 3 weeks ago, we put out our PEA. Baseline results using our 1.1 million ounce resource. Does not include any of the over 30,000 meters of drilling that we've done over the last 15 months on surface and now underground. So we see significant potential, but just looking at the base of what we can do without changing anything, you can see already a very robust PEA, just under 400 million based on $3,000 gold. But when you start looking at what the leverage is here, you've got at $4,500 gold, that goes up just under $1 billion. So that's only capturing a small amount of our resource. We see an ability to improve both the operational efficiency, so the movement of the ore in the underground, optimize the use of the shaft. The PEA does contemplate more ramps than we think we need to do. We need to connect all the mines to the centralized shaft, move ore up the shaft, really maximize the use of that electric power as well, and decrease the use of ventilation in the underground. But more importantly, the speed and the ability to access these new exploration targets in close proximity to the mine is also going to increase the grade profile. I've had the 30 million credit facility on there. I'm not going to get into that because we'll be here a long time, but this is the production profile. You're looking at between 55 to 60,000 ounces over a large part of this PEA project profile or mine profile. Cash flow at $3,000 an ounce is roughly 60 to 70 million, but when you're looking at $5,000 an ounce, you're now up to 150 million plus of free cash flow to the company. So there's significant torque and leverage on this project, mainly because a lot of the costs are fixed. As the gold price goes up, you get maximum exposure on this. And this is the mine plan built around 25 meter wide long stopes, 1.5 meter wide, 18 meters up. We think we can do it a little bit narrower. We think we can keep the development a little bit tighter, which keeps the costs down and allows us to improve the grade coming out of the underground. Those are just one of the things we expect to do to be a little bit more successful than what's in the PEA. The big thing here, though, is really the exploration. I'm going to skip this one because we're going to run tight. The exploration side. This is looking down at the property. You see a number of colorful lines on there, which really represents host rock. What we've been doing over the last year and a half is testing areas where different shear structures intersect that same favorable host rock. We've had success 3 times. San Antonio West, San Antonio Southeast, and the Shore target all sit within 300 to 500 meters of the existing underground mine infrastructure. And all we did was test areas where there was a shear hitting the same host rock, which we know gave birth to the original shaft mine that we're still running today. And we had success. Now we've been able to extend them down. These are areas we can advance into laterally from the mine and expand the production potential higher up in the mine, which allows us to increase throughput going up to the mill. That's how we're going to grow this from being a 50, 60,000 ounce producer to be 100,000 plus. On top of that, then you get out into the regional areas. That's where you're going to see significant leverage. I'm on about 10 seconds here, so I'm going to zip through these, but that's one exploration target that we've extended down. Those are 2 more. You can see how close they are to the mine. We can get at these from the underground infrastructure. That's the key takeaway from these. We bring those into the shaft, higher up, increase throughput, increase grade. Then we focus on the regional. As you can see, there's lots of colorful dots. Those represent areas of high grade across our property. That whole area is prospective. We're going to focus on that southeastern part first, where we already have a resource and 3 historic operating mines, which have produced over 300,000 ounces at over 11 grams per ton back in the 1930s and 40s. That's our first priority after getting the mine going. True hub and spoke. There's regional prospects beyond that southeastern part that are going to ultimately turn into mines as well. It's going to take us a little longer because we need to prioritize our efforts. But this is something where we can bring all of that into that centralized mill and process it through there, because that mill has lots of scale capacity. These are our catalysts. I'm not going to go through those because I'm flat out of time, but we've got a lot ahead of us. It's going to be a very busy year. We're going to drill over 50,000 meters on that project on surface and underground. We're going to get another resource coming in towards the end of the year, and we're going to get into production in 2027.